Okay, but now let's go to the basics, right? Introduction to value investing, right? So I don't really need to bring that up here, right? What is value investing? To understand value investing, it kind of goes hand in hand with fundamentals, but essentially, value investing is finding an asset to invest in that is undervalued. Let me repeat that. That is crucial. Finding an asset that is undervalued relative to the market, right? That does not mean finding a great asset. It's finding something that is undervalued. Something can be total garbage, but still be undervalued. Once you get that, you'll get value investing, right? So, for example, let's say that we believe, this is why I was able to see the whole Ethereum trade play out, because my philosophy is Ethereum will flip Bitcoin. Not a matter of when, not a matter of if, but when, right? And this was so easy to find out. So I sold all my Bitcoin, pretty much, back in 2018, and I've not looked back. And the reason being, I'm a value investor, right? If I had to pick one category of investing that's my bread and butter, it is value investing. And the premise begins like this. We have Bitcoin being a store of value, basically digital gold. The market cap of gold is, let's say, 10 to 15 trillion. And we have Ethereum building the next internet, Web3. And to me, the total addressable market for the next internet is much bigger than digital gold, because the next internet is Web3. If you take the whole internet, and if you could take that and make that a stock and invest in it, that's huge. Because just think about it, just DeFi by itself, DeFi, decentralized finance. Basically, take everything, take all capital markets and tokenize them and make them digital. Derivatives is, by most estimates, worth over $500 trillion. If that gets tokenized, it's happening on Ethereum. In this case, probably with L2 scaling, with layer 2 scaling, because right now Ethereum has issues with transaction fees, but that's a different story. So $500 trillion just for derivatives, just for DeFi getting tokenized, is much bigger than digital gold, right? And most of DeFi, at this point, about 75% of DeFi is happening on Ethereum. Yes, you have other blockchains that are competing, Solana, Avalanche, Phantom, whatever, but Ethereum still dominates. Because if we go to, what's that site? Give me a second here. There's this website that I used to go to. Yeah, DeFi Llama. Right, so if we pull up DeFi Llama over here, this shows us the total value across several blockchains, right? And okay, Ethereum has declined, but basically 62%, 63% of DeFi is happening on Ethereum. Then we have Terra Luna at slightly under 7%, Binance Smart Chain, Solana, right? So other blockchains are coming for Ethereum, but over half of it is still happening on Ethereum still. And this is prior to ETH 2.0 actually launching, right? So my thesis was Ethereum, because Crypto Tiger says DeFi Pulse shows better results. DeFi Pulse is also pretty good, but the thesis is this: Ethereum is undervalued. And at that time, Ethereum had 10 times the monthly developer activity of Bitcoin. So when you find a crypto asset that has a larger total addressable market, that has a lower market cap than Bitcoin, that is growing at a faster rate than Bitcoin, basically the fundamentals were telling me that Ethereum was grossly undervalued. So why invest in an asset that's overvalued, right? Value investing is as simple as buy low, sell high. But how do you determine what's low and what's cheap? You look at the market, right? So, for example, one of my better investments ever, Helium Network, just totally crushed it. Helium and Polygon, right? So if we go to CoinGecko, I'll show you why Helium was, as close to a guarantee as you get in crypto, right? Because we can't really make guarantees, but I haven't met anybody who didn't make money on Helium. If you're with us day one, back in the day, because think about it, right? Helium was building a decentralized internet, right, for IoT. That was a huge market cap, right? And the way I compared Helium back then, even though they're kind of different coins, I compared Helium with IOTA, because IOTA was so overvalued, right? And the market cap was 3 billion, right? And we're covering Helium 1 year prior to them launching. And we even did a deep dive report on them when they were around 20 cents. The price now is almost $40, right? You guys can do the math from that, right? But basically, from 11 cents was the all-time low. That's a 251x. The all-time high was $54, right? But imagine the market cap of Helium when it launched was very low, right? You could have basically, on exchanges, it was under $10 million market cap. So here you had a blockchain, right? That's important to, right? Because historically speaking, blockchains have, layer one blockchains, historically speaking, have fared the best. They've had the best return on investment over infrastructure projects, over applications, dApps. L1s make the most money. So here you had an L1 chain that was very innovative, first of a category. There wasn't really anybody out there competing with them. That was valued at under 10 million. And then you had this other project, inferior technology, kind of doing IoT. That was, because the market cap, what's the market? I'm gonna switch to, yeah, the market cap back then for 2020. Let me just double check. Because we're comparing basically spring 2020, so like May 2020. Right? Basically it was over $500 million. I said to myself, superior technology, and because the thing about Helium, you had to mine it to earn it. There was no token sell, except for like VCs or whatever, but that's a different story. You had to mine it. So the initial market cap was super low. And I said, where can this go? Where can Helium go? And to me, it screamed 100x. Let me see if I can find the report we did on Helium. Right, to show you that this, when you're a value investor, you can find these plays that are undervalued. Right, so this is the report we put out. Right, this was a deep dive. This is, if you haven't joined Token Metrics, this is why you should join us, because we do reports like this. And now we have all this automated through live ratings. Right, but basically this is the report we did on Helium. Right, and if you go all the way to the end, right, this was almost 40 pages. Actually, this is the video of me in the offices back in 2019, one year prior to their launch. Yeah, so this is me comparing it. So yeah, so we compared Helium to IOTA and to Hollowport, because Hollowport by Holochain also had some device you would buy and basically mine or store the internet. And we compared the two, right? And the fundamentals were there. They scored high on a fundamental grade. Basically, we go through looking at data points like the team, their background, the use case, and other metrics. We make them as objective as possible as we can, and we score them, and they scored very high on the fundamentals. And basically, the conclusion was Helium Network is our top pick for low cap projects with huge upside potential to deliver 100x returns. Right? And the reason being, right, so we covered it, or this report came out when they had about 3,000 hotspots. Market cap was 8 million. IOTA was 500 million. Holochain 100 million. Right? And the downside was low. You basically would buy the device for $400, plug it in, and begin mining, right? And people were earning 5 HNT tokens a day. And the price at that time was 22 cents, right? And in terms of, let me kind of bring everything back home, right? Because I've kind of been going all over the place. To understand value investing, you have to take an asset that you're researching, in this case Helium, and compare it to similar assets and see where the market prices them. Right? So here we found something that had better technology than IOTA, better technology than Holochain and Holoport, and anything that was somewhat similar, yet had a valuation that made no sense. That by definition is being undervalued. And when you find something that is that undervalued, that is a home run. That is where you back up the Brinks truck. And because with this, you would just buy the device and mine. So it's like mining Bitcoin back in early 2013. So to me, the downside was losing $400 or $500 on a miner, and that was it. Maybe some power, but I didn't really care about power, right? But once you see something is undervalued, you can then use that to double down and place a bigger bet because you have the confidence to swing for the home run, right? A different example is Polygon. I think this might even be a better example, right? So we covered Polygon after we met them in Hyderabad, India during our Crypto World Tour event in 2018. So I was in Polygon when it was under 3 cents, but back then it was called Matic Network. But when they pivoted from being just Matic Network to Polygon, this was what, about a year and a half ago? Yeah, it was almost 2 years back, right? They basically pivoted to being the internet of blockchains, and that was the category they were in. So what I asked myself, because when they did this, their price was around 8 to 10 cents. And that same day I doubled down and bought a bunch of Matic Network or Polygon at 10 cents. I bought even more because I had some under 3 cents. I was staking that, but I went not all in, but it became a large part of my portfolio. I think when they changed to Polygon, it became probably my second largest holding because then it was super undervalued. Basically, the fundamentals shifted from, it basically became the internet of blockchains on the Ethereum network, right? What does that mean? Because basically, the internet of L2 scaling, layer 2 scaling. So you have basically the Ethereum network, then you have a layer 2 network, which is basically a blockchain that is built on top of or being secured by Ethereum, but basically it's a side chain almost, or a different blockchain that is tied to the Ethereum network. And you have all these other different blockchains that are working together with Ethereum to help offload transactions to have them run a lot faster. For example, for gaming, for NFTs, for metaverse. But at a high level, they're trying to offload transactions to help the Ethereum network run faster, right? Because you can run games on Ethereum network because the transactions per second do not support gaming. So you have a different blockchain that has a lot less security, that can run a lot faster, but then gets secured by offloading transactions onto the Ethereum blockchain. But now you have so many other competing different layer one, so many other competing L2 chains. How do you know which one to use? This is where Matic comes in, right? It's Ethereum's internet of blockchains, right? And the chains they support, where is this? Right? They have ZK rollups, optimistic rollups, enterprise chains, Polygon Plasma, Polygon Proof of Stake, standalone side chains. So you as a developer, you don't have to choose. You just use Polygon and it will pick which one it thinks works best, whatever, right? But the reason why this became undervalued just by changing their use case, because the total addressable market became bigger. Because now I said, okay, if they're going for the internet of blockchains, what other similar blockchains out there is it now competing with? And at the time, it was competing with, if you go to, just give me 1 second here. I'm actually log into Token Metrics. And this is going to be a long masterclass. All right. So, okay, so this is Token Metrics. All right, so I asked myself this, because as a value investor, this is the main question you ask. What competing projects have a similar use case? So use case for Matic or Polygon was Internet of Blockchains. And then once you have the list of similar blockchains, what is the market pricing those blockchains at, right? So we had Polkadot, market cap, 33 billion. We had Avalanche, 27 billion. Because back then, Polygon was hovering between 90 and 100 market cap, right? We had Cosmos, 8.5 billion. And was there any other? Icon wasn't really there, right? But basically, those were the three projects. Because back then, Matic's market cap and valuation, market cap equals valuation, right? That's what the market is pricing that at. Meaning that if you take all the tokens for Matic network and you multiply them by the price, basically, if you take the circulating supply times the price, that gives you the market cap, the valuation. If you take all total tokens, even those that haven't been minted yet, and you multiply that by the price, that gives you the fully diluted valuation or market cap, right? Now, you want to use both as an investor, right? As a value investor. But in this case, I used just purely the market cap, not the FDV, right? So for instance, looking at this now, right? Market cap for Matic or Polygon, about 19 billion. FDV, fully diluted valuation, 27 billion, right? But at the time, market cap was 500 million, but competing projects were getting valued at a minimum 5 billion, right? And the lowest at that time was Avalanche at 5 billion, but Polkadot was like $20-30 billion range. I asked myself this, right? Is Polygon or is Avalanche 10 times better than Polygon? The answer was no. That meant to me Polygon was undervalued, right? And then same thing with Polkadot, right? Because our team goes through and does objective ratings across the board, and we had rated Polygon's technology on a scale of 0 to 100 as an 88. We had rated Polkadot as a 94, and Avalanche at that time was like a 78 because it was relatively new. And I felt at the time that Polygon had better technology from talking to our developers, but the valuation was a tenth that of Avalanche. And I said, okay, so basically you have the first of a category. You have first, second, and third, right? When you have first, second, and third, you then project out the asset you're looking at and say, okay, if this has better technology, where can this go? And to me, the minimum was flipping Avalanche and being third in that hierarchy. So to me, that was a 10x. So as a result of that, I saw that Polygon was undervalued relative to its competition, in this case, Avalanche and Polkadot, right? Because Polkadot was going for 20-30 billion. Why can't Polygon flip from $500 million to 5 billion easily, if not 15 billion, right? And that's how you value invest. You basically find great assets, great investments, but what matters about value investing is the price you pay for them, the valuation you pay for them, right? So for example, technology-wise, Polygon is great, if not even better than before, but would you buy it now is the question, right? This is what tricks up people who don't get value investing. Value investing is not necessarily about finding a great asset. It's finding something that is undervalued. And that is why Bitcoin is great technology, but it is not undervalued. Yes, it is undervalued relative to stocks. But in terms of the entire crypto market, I think there are other investments that are more undervalued than Bitcoin. Ethereum, heck, even Polygon is more undervalued than Bitcoin relative to market cap, right? What's more likely to happen? Bitcoin doing a 10x or Polygon doing a 10x or Helium doing a 10x, right? So those are the questions you have to ask as a value investor. What are competing projects in the space? What is the market pricing them at in terms of valuation? And that's what you're looking at. Is it better than those projects? If it is, what happens if it flips and becomes the third in the hierarchy? the second, or the first. When that happens, that gives you the valuation range. Right? So for instance, if we go back to Token Metrics and we pick a coin, all right, this is where the scenario modeling does help. So if we pick Polygon, I think this should be at the price predictions tab, right? So this helps with that, right? So for instance, right now, in terms of, if you take the market cap for Polygon and divide by the market cap for the whole market, basically it's slightly under 1%, about 0.8% dominance, right? Now, if you think the dominance of Polygon will increase, right, what market cap does that give you? And what price would that be, right? So this basically is a chart you can use for that. But for me, I like to kind of just look at it from a very simple perspective. What are the top 3 projects in that sector or category? If this has superior technology, where can it go? Basically, the minimum is the 3rd place, the maximum is the 1st place. That gives you the range for valuation. And for me, as a value investor, I like to find investments that will give me a minimum of a 10x return, right? To me, that's my definition of being undervalued. Meaning that textbook Polygon at $500 million valuation, a 10x, right, from that valuation is $5 billion. It would be around the same valuation as Avalanche at that time. This was slightly less than 2 years back, right? And that's why I knew Polygon was undervalued, and I was able to double down and buy even more. All right, so that is value investing.